Hello, I'm Eric Wiley with PacRes Mortgage. I'm here with Rod Miller, and Rod, you and I have worked together for almost 3 decades now, between 2 different companies, and we've been at this company now for 20 years. So crazy amount of time has gone by. Now, within that time frame, more recently, you've gotten into reverse mortgages, and by more recently, I mean probably like the last 5 years or so, right?
That's exactly right.
And you champion it within PacRes at this point, and you're the division head of reverse mortgage. So I would like to interview you and talk to you about, what you see in the reverse mortgage product, things that you see opportunity-wise that a lot of people may not know or realize that the product offers. And then kind of just go into a Q&A, some of the things that people, realize come up during transactions or things you can think about before entering into a transaction with reverse mortgage that would maybe set the table better for conversations, make sure those are key points that are discussed. So Rod, real quick, where are you located? How do you serve? And also kind of how do you run the division within the company?
Yeah, absolutely. So my home office is in Portland, Oregon, licensed in about 11 states at this point. So we have coverage up and down the West Coast and in the Southwest of the United States as well. My primary role, as Eric said, is to kind of be the champion of the product. I've developed training curriculum so that other folks within our company can become certified to offer the program and really meet the growing needs of seniors as they enter the final phase of their home ownership lives. They have different needs, and income is certainly one that we're seeing as a challenge as inflation and other costs continue to rise. Healthcare certainly having home equity available to supplement income or to cover unexpected expenses can be a real lifesaver for a lot of our senior homeowners.
So Rod, first off, reverse mortgage, that means that there's forward mortgages out there. So kind of describe the difference between, just fundamentally, the difference between what is a forward mortgage and what's actually a reverse mortgage.
Absolutely. So in a traditional mortgage, we're all accustomed to having a monthly payment of principal and interest that's due to pay the interest that is accumulating during that monthly billing period. On a reverse mortgage, instead of the homeowner making a payment of interest and principal, just the opposite happens. The interest and principal is then added to the balance. So this is a growing balance mortgage that will increase over the lifetime of the loan. So when we initially put the loan together, we have to forecast based upon the youngest homeowner's age what their life expectancy is, and that dictates how much of their home's equity is made available when the loan is first provided to the homeowner. Then over time, the balance will gradually increase at the current rate of interest, but the perfect outcome is when the loan is due for repayment, there is still equity left in the property that would go to the estate, and the heirs can then benefit from the remaining equity in the loan, or equity in the home property.
Now that brings up a great question. So on a forward mortgage or standard type mortgage, you pay it down over time and normally over a closed period of time. So let's just say the conventional 30-year fix is kind of a popular one. So it's paid down over time, and the interest component and the outstanding balance go down over time, whereas on a reverse mortgage, the opposite kind of happens, right?
Exactly. And we want to make sure that we have enough equity in the property to absorb the increase in the loan balance over time. Fortunately, we've been in a really strong housing market for the last decade, and values have continued to increase, primarily because we have a shortage of homes on the market. So that's been a boon for homeowners, that if you have a property, you've really benefited by your home value increasing. And that's one of the main reasons that a reverse is such a great product for our seniors right now, is they have that available equity to absorb the increasing interest if they were to take out a reverse mortgage and be able to, to meet whatever their financial needs might be. And just a really good product for a lot of people. And well, a lot of people meaning 62 and over. That's the minimum age. And right now, the last statistic I saw is 12,000 people a day turn 62 in this country. So there's a lot of potential clients that might be well served by considering a reverse mortgage.
Now, Rod, on a refinance situation, do people already have a mortgage that maybe they're replacing, or could they maybe not have a mortgage and still do a reverse mortgage? Kind of describe what that looks like.
Yeah, I think traditionally people thought of the reverse mortgage as something that was only available for homeowners that had a free and clear property. That really isn't the case. We're finding more and more people are entering retirement with the mortgage balance, and as long as the mortgage balance is, let's say, anywhere from 25 to 40% of the property value, we likely can help with reverse mortgage to extinguish their forward mortgage and eliminate that monthly payment. That brings a lot of cash flow relief to seniors that are entering into a different phase of their income life. Having that housing expense eliminated just gives them much more freedom in terms of how they manage their money on a monthly basis.
So, Rod, with respect to how the funds for the loan works, so let's just say you have X amount of reverse mortgage that people qualify for. Let's just call it a $500,000 loan. So if they have a $500,000 loan and they have a loan that they're paying off that's less than that, let's just say $250,000, then there's $250,000 left over. How is that handled, and are there differences in how it can be handled?
Yeah, great question. And that's one of the nice things about the reverse mortgages. There's multiple ways for homeowners to access their equity. So in the scenario you described, Eric, we would disperse a lump sum of $250,000 at closing, extinguish the existing forward mortgage. The remaining funds then can be accessed in a number of ways. Some of our clients, we set up a monthly disbursement so they get a set amount every month. Others prefer a line of credit that's just there on demand should their finances require a lump sum disbursement. So we can do that and have the flexibility to change that throughout their lifetime. So it's a very flexible product, but I would say the majority of our clients, the vast majority, probably 90%, are going to elect the line of credit option and then just have the flexibility to make adjustments as their financial needs require.
So, Rod, on the refinance version of this again, what are some principal or main reasons someone may be interested, and certainly of those that are interested and follow through, what are their main reasons and motivations for doing so?
Yeah, I think the primary reason that we work with folks is there's a monthly cash flow challenge. Certainly the last couple of years we've seen inflation become an issue, and for a lot of our seniors that are on the retirement income phase of their life, having increasing costs with a fixed amount of income is a challenge. So being able to provide supplementary income by accessing the equity in their home brings a lot of relief to a lot of our clients. So that's probably the primary reason, is just providing some additional income to help make ends meet from month to month.
That's excellent. Now, kind of a funny one here. A lot of people may not know this about the reverse product. Can you actually use it for buying a home?
You can, and this is a new development in the last 10 years. FHA, who administers the vast majority of reverse mortgages in this country, they came out with a reverse for purchase product. So the same concept exists, that the reverse mortgage will provide a certain percentage of the property's value. The client then brings in the difference. So hypothetically, if a homeowner wants, or a home buyer wants to acquire a property that's valued at $600,000, the reverse mortgage might provide $200,000 of funding. The client brings in $400,000 as their down payment, and essentially they have a free and clear home in terms of there's no payments at that point. They do have a loan on the property, but to mirror what a free and clear property looks like, there is no monthly payment associated with that. Certainly they have to maintain property tax and homeowners insurance and maintenance of the property, but they do not have to incur a monthly payment with the reverse for purchase transaction.
So, question for you. Some people come to the reverse mortgage product with some questions, some concerns, maybe even some fears, and that may extend past just the folks that are looking to borrow the money, but rather maybe family members, maybe friends, of the family. What are some concerns that people have that maybe, aren't really that much of a concern, or that become a talking point that must be addressed fairly early in the process?
Certainly, yeah. There are some misconceptions about the product, and some of those are just misunderstandings. But I will also say that if you rewound 20, 30 years ago when the product first really came to market, it was a different product then than it is today. And we've seen a number of enhancements and improvements because, quite honestly, there were some flaws when it was first rolled out. What we do differently today is we have a financial assessment that we have our clients go through, which basically it's a way for us to verify that if we provide the reverse mortgage, will the homeowner have the financial means to make their tax and insurance payments? The last thing we want to have happen is have one of our clients obtain a reverse mortgage yet not be able to pay property taxes. And like any mortgage, forward or reverse, if you're delinquent on your property taxes, the lender will initiate foreclosure proceedings. And we don't want that to happen to anybody, especially a senior homeowner. So we want to make sure that we go through the vetting process, ensure that it's a good financial fit for the client. And so that would be one thing that we talk about with them in depth is, can we financially afford the product? I think the biggest misconception people have is if you take out a reverse mortgage, you're signing over the title to the bank or to the lender. And that's absolutely not the case. A reverse mortgage is treated just like a forward mortgage in that there is a security interest that the lender will take with your home. However, the lender does not have the right to take your property from you. So you retain the title as the homeowner. If you decide to move and sell the property, you can do that at any time. So there's the same amount of flexibility with reverse as there is with the forward in terms of how the loan is paid off and who holds the title to the property.
Now, one of the fears that I think we've heard in the lending community quite often is, do family members somehow become obligated in the event that unfortunately those that are in the reverse mortgage pass away and now there's an estate and maybe the loan imbalance has exceeded what the hot property values, actual market value is at that time? What happens then?
Yeah, that's a great feature of the reverse mortgage. And I mentioned FHA earlier, the Federal Housing Administration. Their role is really key in this, in that they insure the loan against a negative equity outcome. And what I mean by that is if we have a client take out a reverse mortgage and the loan balance exceeds the property value at the time that the loan is due to be repaid, there will not be a deficiency that passes through the estate and to the heirs. FHA would step in and they would pay that deficiency so that the property itself is the sole means of repayment. So if we have a shortfall, let's say the property is worth $500,000 at the time that the loan is repaid, but the home value, but the loan balance is $600,000. There's a $100,000 shortfall, and I think we've all experienced back when the financial crisis, short sales were a very common occurrence. Values of properties were falling, and loan balances exceeded property values. Short sales were the only way for clients to get out of those mortgages. With the reverse mortgage, FHA would step in and take care of that deficiency, and so that debt does not continue beyond the payment through the sale of the property. So it's a very secure way. Heirs are protected, and it allows the homeowner to not have to concern themselves with what the property value might be in the future.
So something else about the reverse mortgage product that is maybe unique over some other products out there is that there is an extra kind of checks and balances process that must be adhered to and gone through up front. Describe what that looks like.
Absolutely. Yeah. To my knowledge, the reverse mortgage is the only financial product that requires the client to go through third-party counseling before they can obtain the mortgage. And so as a loan originator, we need to make sure our clients have a certificate of counseling before we take any action on a loan application. So what the third-party counseling does is it gives an objective consultation talking about the benefits of a reverse mortgage, the costs of a reverse mortgage, alternatives to a reverse mortgage. Maybe a traditional cash-out refinance might be a better product, or a traditional home equity line of credit, or the counselor may advise them to sell the home. There's lots of different outcomes that could be a positive for the homeowner. We don't know that until we go to a neutral third party, and that's what the HUD-approved counselor will do, is take the homeowner or the prospective reverse mortgage client through about a 90-minute counseling session to discuss all those different things.
And you mentioned HUD. So what is HUD, what is FHA, and how do those two relate?
You bet. So HUD, the Housing and Urban Development, they oversee all of the lending in the United States. They establish the guidelines and the rules that lenders follow. FHA falls underneath the HUD umbrella, and they administer certain programs. And I mentioned before, they're the key, probably 90% of reverse mortgages that are originated in the United States fall under FHA's guidelines. There are proprietary or jumbo reverse mortgages, if you will. Those are typically for properties that are going to be worth $1.2 million or more. If the property value is under $1.2 million, the FHA product is an excellent fit, and the one, again, that the majority of our clients are going to be receiving from us.
So Rod, let's just say someone or their parents are interested in this product. What are first steps? Like, what should they be preparing, or what actions should they take to start the process?
Yeah, it's really the typical consultation I would have is just to provide some basic information so that they're aware of what their options are. And really, I gather about 3 critical pieces of information just to start that conversation. So we want to know the dates of birth for all homeowners. We want to know the estimated value of the property. And then lastly, we want to know, is there a mortgage balance on the home? And acquiring those three pieces of information allows me to come back to them and say, all right, well, based upon that criteria, here's possibly what we could do for you. We won't have gone through the whole origination process at that point, but it's really a conversation piece for them to say, I want to know more. This sounds interesting. At that point, we would say, fantastic. Here is a set of documents for you to review and schedule your time with a counseling agency. The counselor will review the same documents that I'm providing to our clients. So they'll have all the numbers. They'll go through everything to make sure that what I'm providing to them is actually the right product. But just those three pieces of information, date of birth, the property value, and mortgage balance, it really gets the conversation started.
So Rod, there's apply online features, there's kind of quick pre-approval type process out there online. Does the reverse mortgage really fit into that mold, or is it a little different in how it should be handled?
Yeah, I would definitely say it's a different product in life cycle. We really don't encourage people to apply online. This is a much different sales process, if you will. The consultation at the beginning that I mentioned really gets things started, but it's really a one-to-one personal relationship that we have with our clients, and I prefer to meet face-to-face with them if possible. Sometimes distance causes a problem, but thanks to technology, we can jump on a Zoom call, and I really find that our clients that are interested in a reverse like to see the whites of my eyes and shake my hand if possible. So we want to have that really consultative conversation with them and provide as much value as we can, and that isn't really done online. It's really done face to face and over the telephone, and any way we can have a personal interaction with them.
Now, Rod, you had the department. Are you the only person who is licensed to be able to do FHA's reverse mortgage product, or are there other people in the company that can also do this?
Yeah, we've actually created a certification program for our loan officers. If they desire to offer the product to their clients, then they would go through an internal training that we've established. So we want to make sure that if we have employees of PacRes Mortgage offering this program, that they know exactly how it works. It's a different loan product. It's a different client. It's a different process. And we want to make sure that this experience is top-notch from beginning to end. And we don't want just everybody who is a licensed originator to have access to the program, quite honestly. This is a product that it's somewhat of a sensitive client in terms of their age group, and we want to make sure that we take great care of them and give them the best experience possible. So yes, we do make it available to other originators in our firm, but they do have to go through some stringent training to be able to offer it.
Well, Rod, this was really good information. I really appreciate your time. Thank you so much, Mr. Rod Miller.
Yeah, my pleasure. Thank you so much, Eric.
Thanks.